Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns and Seeking Alpha. Today, I want to talk about Coupa Software. So, Coupa Software is a business spend platform. It just put out its results for Q3 2022. As we go through this, remember that their fiscal year and the calendar year misaligned. So, I'm just going to be talking about the fiscal year, okay? So, it's a procurement platform that gives businesses control and visibility into their spend, okay? So, it's a SaaS business model that oversees three modules: supply chain, procurement, and finances. So, it's well disposed to benefit from enterprises' digital transformation. However, we're not really seeing that take place right here. So I'm going to go through some of the good points, some of the bad points, talk about its valuation, and yeah, I hope you find this video useful. Okay, so let me just go through. So, last several days it's been like this. Every single company that I follow in tech is pretty much like, Well, there was one exception, but for all intents and purposes, it's been pretty much like this for the last several weeks. And so, yeah, this is nothing new to see here. Investors are just pushing back and saying, okay, we don't want any more overpriced growth companies. And what I've been saying for a while now is if you're willing to have two things, if you're willing to do a little bit of work and you're willing to sit on your hands, you buy and sit on your hands, there are some opportunities. That being said, I don't think that Coupa software is one of those opportunities that are particularly interesting. So back in September, I said, and you can check the articles, you can see that I said this, at 23 times next year's revenues, I don't find the stock particularly cheap. And I have nagging questions over its performance. So more concretely, what is revenue growth rates actually going to sustainably stabilize at? And yeah, so this is what I said, and this is what it is. So here's the thing, right? So the guidance for Q4 is pointing to 13% year-over-year growth rates. And if you think about it, this is the thing that I've been saying for a while. When you look at Coupa software, you look at H1 2022, you see a business is growing at approximately 40% compounded annual growth rates. And I'd said that before, and I say it again. When you look for Q4 of this year, you're thinking about, okay, I know that they're sandbagging their results, they're down, putting their guidance quite low to easily beat the estimates. But let's say, for the sake of discussion, that they come out and they put out 20% growth for Q4 2020 and 2022. Even if you put 20% growth rates, you're still decelerating substantially, approximately 2,000 basis points deceleration from the first half of 2022 into Q4. And that necessarily brings up the question going into next quarter, when we get into Q1 2023, what are the growth rates going to be like? Because as they come around and they comp this strong period, it's going to be difficult for them. Okay. Now let's just go forward and unpick something here. So yeah, this is pretty much what I said in the previous article. That as we look slightly forward to Q4, there's a meaningful drop expected in growth rates. I'd already said this all. Basically, everything I just been through, I had already written it down in September, so it's not news to anyone here. Yeah. So to be absolutely clear, there's a lot to like from Coupa. It's not that I'm totally bearish here. I really like this company. So Coupa is a spend business management platform. Okay, so as you think about it, right, companies need right now more than ever before probably visibility into their supply chain. And you don't need me to tell you that, every single company is having issues. Everyone went from just-in-time manufacturing, and now they're like, oh my God, do I need to stock up? Do I stock up too much? And if you stock up too much and you're not able to dispose of that inventory, then it costs you. And if you don't have enough inventory, obviously your customers are going to be really frustrated and go off to somebody else. So supply chain issues, it's on the headlines every single day. So Coupa is one company that's recognized by Gartner as for leading in execution in the Magic Quadrant. So this is something that they do really well. They help you connect up between your customers and your customers' customers. So it's a procurement platform, right? And there's a lot here to like. If you look at the reviews, the consumer interface that they have is like a consumer-like interface that they have for businesses, and it offers an overarching platform for enterprise resource platform. So as more and more companies gain complexity and it's becoming quite siloed, the IT space, so you need someone to go over that and a platform that can basically offer you an end-to-end platform that can basically give you some visibility into how you're connecting up with your customers, you're invoicing them properly, and just being able to have some kind of planning and visualization, really. So there is a lot to like here. And I already alluded this before. This is from October 2020, so from last year. But anyway, I mean, Gartner recognized them already before, and I haven't got the figures for this year, but I suspect that they'll still be leading in this space against the likes of SAP and others as well. Now, this is what I said a few months ago, and I continue to say it now. A few months ago, I said, okay, what Coupa is doing is they're getting rid of a small portion of the professional services. This will dampen its revenue growth rates, but you should start to see some profitability improving along this line. So that actually isn't taking place. So if you see for Q3 2022, the results I just reported last night, operating margins were 11.6%, which is a slight improvement from 11% in the same period a year ago. Right? So you got a 600 basis point improvement on the non-GAAP operating margin. Now, they don't give you non-GAAP operating margin for Q4, they give you a non-GAAP income from operations. So it's slightly lower down the income statement, so you have to keep that in mind. But as we look to Q4 of last year, they were at 7.9%. Okay, and for Q4 of this year, they're guiding for 5%. So there is more compression there. So they're not seeing that ability to drive revenue growth rates and to see that percolate through to the income statement. So with that in mind, if you have decelerating growth rates and compressing margins, I mean, you're not going to pay a premium for that stock. It's just simple as that. So management, here's something that's positive that I wanted to highlight. Management talks, okay, on a rule of 40, we're best in class. They said if you look at their trailing 12 months on a rule of 40 that takes adjusted free cash flow margin relative to revenues, they come up at 67%. As a reminder, the rule of 40 is, when you look at the rule of 40, you want to see how well management is balancing that top line growth with bottom line profitability. If you hit 40%, that's good, and anything above that is obviously great, right? But if you look out to Q4 and you think about it, right? So Q4, they're pointing for approximately 13% year-over-year growth rates, and I don't know what the free cash flow is going to be, but let's say for the sake of discussion that it comes up at 10%. I mean, even 15%, it won't matter because on a rule of 40, they'll be at 30%. So I know that they're going to say, okay, yeah, we're going to pick that up next year, and they were very purposely didn't give you any guidance for next year because they need to buy some time, right? Because as it stands right now, the visibility that they have into their own businesses, they're going to struggle to kind of come to meet analyst expectations. Now, here's the thing. Billings is a leading indicator of revenue growth rates. Billings for Q4 are pointing towards 290 million. This compares to 270 million the same period a year ago. Now, keep in mind that last year they had the acquisition of Lamasoft. So once we come around to comping that, you're pointing towards approximately 7 to 8% year-over-year growth in billings. Now, just keep in mind that there's some adjustments that need to be made because of the acquisition. So if you back out some of those adjustments, you end up with mid-teens. Now, if billings are growing at mid-teens, and you have revenues growing at, let's say, 15 to, let's say, 17% if they kind of beat, it's going to be difficult to see this business growing at 30%. This is what I'm saying. So if you think about it, right, look around in tech, look around, there's so many high quality businesses that are priced now at less than 10 times forward sales. Why would anyone be willing to pay 14 times forward sales for Coupa? Now, Coupa's after hours share price was down just slightly, 10%. I mean, you've seen so many worse performance, and I think that investors have actually underreacted to this. I think that in the next coming days and weeks, I think that people will sell off substantially. Now, I don't have any position here at all. And as I said at the start, that there's a lot to like about Coupa. It's really helping enterprises in their digital transformation. But I would like to see that when we come around to Q4 results in 3 months' time, I would like to see them when they put out their guidance, they need to be guiding for at least, let's say, 20 to 25%. Because if they're not guiding for 20, 25% and someone's paying 14 times forward sales right now, it's expensive. Simply because of the overall sell-off that we've seen in tech right now. So it's not something that I'm particularly bullish on. And there are many stocks out there that I'm really, really bullish. And if you want to find out those names, don't forget to check out my marketplace called Deep Value Returns. I highlight stocks that I'm investing in right now, and I help you become a better investor. And you can check out my reviews, see what other people have said. Okay, thank you so much for listening. Bye-bye.